Hey, good morning, guys. It's Monday, April the 8th, according to the calendar anyways, but after my drive in this morning, I'm not so sure. I'm not sure if this winter is ever going to end, but nevertheless, here's my weekly update for everybody. And this week I thought I'd just talk a little bit about bridge financing, or interim financing, whatever you want to call it, since it seems to be coming up, you know, quite a bit these days with a lot of the clients that I'm working with. And there's just a couple of ins and outs that I thought maybe I'd explain that maybe you're aware of and maybe you weren't, but hopefully it might help you, make some of your transactions a little bit more smooth. Make it simple. Bridge financing is usually required most commonly when a buyer is selling their current home and needs to use the resources or the proceeds from the sale of their home as a down payment on their new home that they're moving to. Usually buyers try to structure it so that they move into their new house shortly before the sale of their old house closes. This just makes it easier from a moving standpoint, but it requires that those funds from the proceeds of their sale get bridged for the down payment on the new house. Pretty simple concept, and generally, most lenders or good lenders or banks or A lenders out there have this service internally, and usually it's at a cost of, usually there's an administration fee of a couple $100 to $500, and the interest rate is usually prime plus about 4%, but the interest rate really isn't that material since the bridge is normally only for a few days or somewhere under a month anyways. But anyways, the reason I bring this up is that for a couple reasons. Number one, not all lenders offer bridge financing, especially if you have a buyer that for one reason or another has to use a B lender or some kind of an alternative lending source for their mortgage. Most of these lenders don't provide it, and in those cases, those clients need to go out and get that bridge from another resource. And sometimes when you get the bridge financing on a standalone basis, it can be pretty expensive, depending on the size of the bridge. Usually those lenders are looking for $1,000 or $1,500 fee to get that done. So that can be a little bit more of a kick than a standard bridge. The other thing is some people don't put a bridge in place when in all actuality they should, and this would be true for clients. A lot of times you'll see clients that try to make their possession date for their new house and the closing date of their old house on the same day. Now, technically speaking, that should work without a bridge, but after working for years now with various lawyers, this can produce a little bit of a problem, because basically you're counting on the proceeds from your sale to close and be available for the possession of the new house at whatever time of day, maybe noon on that possession date. And sometimes there's things that come up on the legal end that don't allow this to happen in a timely manner, and this can be a problem if those funds aren't available to close on your purchase in time, and it can really leave the lawyers scrambling, and in some cases leave the buyer in a bad predicament. So a lot of times I'll talk to the lawyer and I'll talk to clients, and even if they have the closing date on the same day, it makes sense to put that bridge in place, even though there is a cost to it. It can definitely sometimes make the difference between closing in time and not closing in time, and putting yourself in a bad position with regards to your purchase. So just a couple of small items to maybe think about next time you have a client that might be in this position. On the rate front this week, not a whole lot of change to talk about again. Seen a little bit of a dip in the variable rate market. Couple lenders getting a little bit more aggressive, getting down to that prime minus 45 basis points, which is starting to get appealing for some people out there that are real avid supporters of that variable rate mortgage. Everything else is about the same. You're looking at 2.79% on a 5-year fixed, 3.69 on a 10-year fixed, and then a couple good shorter term specials out there. I think 2.59 right now on a 3-year fixed, but once again, it's hard to justify that knowing that you can get 2 more years of stability for not a whole lot more in rate. So that's it for this week, guys. Please, as always, give me a call if you have any questions. Send me an email, and or if there's something you'd like me to discuss in one of these updates, then just let me know. Have a great week.